This type of revolutionary information has the potential to trigger a significant increase in Nvidia's stock price. This report has a lot riding on it. Let's begin with this as you have a new no doubt. All I'm seeing are the estimations. The estimates are as follows: 112% sales growth and 125% EPS growth. Just astronomical, I guess. You seem to be shaking your head, and you're a huge admirer of this business. Can this business live up to these standards? Is it even going to surpass them? Are investors satisfied with simply meeting them? In the past, Nvidia was the engine powering Tesla's innovative technology. Until the business eventually created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. One specific model, for instance, is presently retailing for $119,000. Get yours now by clicking the link below. But move quickly because there is very little stock. Medium isn't good enough, but based on all of our testing, it looks like this is speeding up. So I think this is going to be a game changer for Jensen Nvidia, the godfather of AI. And every quarter, I believe the street says, prove it, prove it. Nvidia is at the forefront of this revolution, which is only getting started. Because of what this means in terms of technology, I believe it to be the most significant earnings, not only for the year, but possibly for many years to come. I've been questioning a lot of people, is guiding more important than earnings? Due to the high expectations. Even if they meet or surpass revenue and EPS targets, the guidance may not meet expectations. How is the stock affected by that? How does it affect the market, in your opinion? We recently returned from Asia, and everything we checked indicates that the street is still underestimating this acceleration. It's all about the guidance, though, because Jensen is currently the only game in town. And when you consider what Nvidia is doing, particularly with regard to upcoming processors, I think this business is just getting started. Powell and Jackson Hole are undoubtedly crucial, but the market's performance for the remainder of the year, and even beyond 2025, as I can already see, begins with these Nvidia earnings. You mention this every quarter, so I'm expecting. Get the popcorn ready, it's going to be a No, but this will be a showstopper, demonstrating the direction of the revolution, and I believe the doubters will continue to be disproved. What about the inquiries, the gap between their chips revisions, the fact that some of their clients are manufacturing their own chips, and the seeming decline in AI enthusiasm? Are none of those things a worry for you? Yes, it has affected them for a postponed period of 2 to 3 months. That seems like an asterisk to me. In other words, from the standpoint of demand, this is not making a difference. Take a look at what we've seen from the hyperscalers, Amazon, Google, and Microsoft, when discussing the hoopla surrounding artificial intelligence. Nadella discussed the work being done by AMD, the Messi of AI, and Lisa Su. The use cases indicate that the second, third, and fourth derivatives are only now beginning to materialize. Therefore, when I consider the actions of Nvidia and the godfather Jensen, we are discussing transformation. Together with Apple and Microsoft, I think this company will have a $4 trillion market capitalization in a year. You're changing his last name to Jensen Nvidia, by the way. Is Jensen Huang no longer there? You simply made up your mind. You see, you're making choices. I'd like to return to your note. Your analysis indicates that every dollar spent on Nvidia chips kind of trickles down to $8 to $10 for the rest of the computer industry. For some of these other stocks, what does that mean? Remember, it's not just about Nvidia, so that's the most crucial factor. The multiplier is at issue. The revolution, the trillions of dollars in capital expenditures, is the focus. The remainder of the tech industry is multiplied by 8 to 10 for every dollar spent on an Nvidia chip. For this reason, Nvidia's statements are crucial to the continuation of current bull market. Are you implying that it's a wide tailwind and not just a rising tide that will raise all boats because software appears to be under pressure, or at least it was during this AI mania? So it's not just in software. Additionally, it appears that chips have benefited much from the money that was intended for software. You will hear from Salesforce and Benioff even next week. What are they concentrating on? AI. Take a look at ServiceNow and McDermott. That is to say, it has only just begun. The second and third descendant is the software wave. I believe that's what's happening here. Nasdaq 20,000 in a year, and it will still be going strong because the AI party is currently only open until 9 o'clock p.m. We think it reaches 4 in the morning. It ends at 4 a.m., but not to daybreak. And look, there will be moments when the music stops and there is glass in the yes, but as of right now, what we hear next week indicates that the party is still going on. Okay, I understand that technology is your specialty, but you also consider the wider market. We will present a chart. This is the S&P equal weight and the Mag 7. The equal weight has been doing better than the Mag 7 since the beginning of this quarter. How significant are these earnings in relation to that Mag 7 deal, I wonder? Our data team ran the figures and found that implied volatility was either 10% higher or lower after earnings. What impact does this study, in your opinion, have on the AI trade, the mega cap tech trade, etc.? They're the rally's tech bearers. That goes on, and I believe it's only the beginning. Take a look at Apple's recent actions regarding the release of the new iPhone. Because the AI story will take center stage, Nvidia halts the market expansion, which is what we're currently witnessing with the S&P equal weight. Instead of a cut, people are investing their money elsewhere, particularly in cyclicals. Are you implying that some of those flows might be altered by this report? Yes, I believe it does. And as we approach year-end, I believe that tech will eventually drive the market higher from a large cap standpoint. And in my opinion, Mag 7 performs better. However, a lot of people have remained doubtful. The bears have gone into hibernation. When it comes to the numbers in this revolution, they have been critical of big tech for the past several years, but this is not a bubble moment of 1999. Rather, it is a 1995 or nearly 1996 moment. Normally, you would assume that since tech has already performed well, multiples could, or at the very least, multiples don't have to remain in their current position or enter into a contract with a high multiple tech stock. Feel better about the valuations if rates decreased, right? Yes, exactly. AI, in my opinion, has kept technology in a positive place, and Nvidia ought to support that. It isn't a difficult multiple either. Nvidia, one of the most significant corporations in the world, is perhaps 28 times forward earnings, which is for the best. It isn't a high number. Therefore, I believe that if technology is doing well and the Fed cuts, the market as a whole can grow. Do we envision a cycle of orderly easing? The Fed doesn't feel the need to act at a meeting, so they go 50 or something. You believe that they only do 25 this year, followed by 25 at the following meeting, so they might continue next year? Do you think that's how it will be? Well, I believe that the likelihood of a soft landing is increasing. Because of this, the market should benefit from a benign cutting cycle. However, I believe that the Fed's departure from data dependence is crucial, because they missed the inflation shift because of data reliance. Additionally, I believe that they are now missing the soft. However, we don't know how strong the lag impact of the higher rates could be. So what if are they too limiting at the moment and the lag is, and they wind up doing 50 or a couple of 50s? Is that feasible? Futures markets, in my opinion, are displaying more than 2 cuts. Therefore, I believe that the Fed is likely lagging behind. There was a lot of suffering since, as we all know, there is a recession in the sales of durable goods, houses and automobiles. Therefore, it would really make sense to reduce more aggressively, at least from the standpoint of the market. Since you're interested in market cycles, where do you believe unemployment peaks? Do we surpass 5% unemployment when we reach 5? It has a lot to do with the Fed's communication with CEOs, you know. Since many businesses are cautious, isn't that right? They are hesitant to expand when monetary policy and real rates are this tight. As a result, the job market itself is somewhat dependent on the Fed's actions. And yes, it might get worse as unemployment starts to rise. Nvidia is,